Okay, so let's just check into the Ghana markets. It's been a tough year, 2023, so far for the authorities in Ghana, battling a weak currency, insufficient foreign currency. You have high inflation and rising fiscal debt. But the administration of President Nana Akufo-Addo is not giving up on steering the economy and the markets through the tough times. For more on Ghana's latest macros and the markets, I'm joined now by Michael Asare. He's a research analyst at African Securities in Accra. Great having you on the show tonight.
Great seeing you today.
Thank you so much, Akwaba. Let's start on the corporate news side. Now, let's talk about the latest earnings for full year 2022 and the first quarter. What's these numbers from the company showing about, revealing about the state of Ghana's economy?
Well, I mean, the results clearly shows very challenging times in terms of business operating in 2022, and specifically for the banks that recorded a significant losses, actually due to impairment losses from the domestic debt exchange. We clearly look at the data. You could clearly see that in terms of operating income on operating performances, these institutions perform very well. But then the significant impact of the domestic debt exchange or the impairment losses eroded significantly the earnings for these firms. But however, the latest, which is the update with Q1 release, that have shown, an impressive performance. I mean, this was a surprise to me because it showed a growth in profit after tax in most of these corporations that have released their results so far. So yes, for 2022 results, it was a challenging time in terms of business environment, specifically for the banks as a result of the impact of the domestic debt exchange.
Very interesting when you say these earnings are coming through with some positive bottom line, as it were, for the companies. But let's look at the stock market index, which was down 2.16% as the Ghana's composite last month. So what's your outlook on the current quarter? Do you think these earnings coming through could impact investor sentiments when they look at the bottom line and found that the companies in which they've invested are not really doing so bad if you consider inflation and other vulnerabilities last year?
So yes, once again, with the Q1 results coming in positively, if subsequent quarters also show significant results from these institutions, then that clearly will give a boost to these price actions on the market, because it will clearly shows some resiliency from these firms on the stock. So generally, my outlook for the next or subsequent quarters in terms of the market index, that I'm expecting the index to sustain its gains on the market. I mean, with Q1 performance, we realized some three key stocks, Benzo, Palm Plantation, had about more than 80% year-to-date return. Totals Energy also recorded above 60% year-to-date return. And then MTN came in about 42% year-to-date return. So these counters, in my view, will sustain their upward price movement, and that should sustain the index.
Michael, let's chat a little bit to the local debt restructuring exercise, which was completed back in February. How would that exercise, how is it impacting the earnings on the exchange and the overall performance, in particular, the banks that are listed on the Ghana Stock Exchange?
Well, thank you very much. As I said, if you look at the operating performance for these banks, they did very well in terms of operating income. However, the impact of the domestic debt exchange, which was reflected in impairment losses, significantly eroded the earnings for these counters. So we've generally seen lower price actions around these banking counters as a result of these risks crowded around on their neck. So I mean, if you look at the data, ABSA, GCB, and these other banks, top banks, recorded a significant loss in terms of impairment, close to about 2 billion Ghana cedis, where Carbank and Ecobank also followed with a billion loss in terms of impairment loss. So the impact of the domestic debt exchange has significantly affected these banks. And yeah, so these, I mean, has significantly affected these banks. But the positive outcome from these is that the regulator, I mean, has come up with other measures in terms of reducing the capital adequacy ratio and then giving out guidelines on spreading some of these losses by an extended period of time to lessen the impact.
Interesting how much progress has been made on that front. But again, there's a whole lot to do about the debt talk with the IMF and the $3 billion bailout that Ghana is looking to get from the institution in Washington. So where are we on that as far as the Ministry of Finance is concerned? Do we have an agreement with the Parliament? Talk to me on that.
Well, I must say that the fiscal authorities, they have made significant progress. If you look at in December, where we concluded the staff level agreement, the government has been able to finalize on its local debt treatment, which was one of the key requirements that was needed to be able to secure the IMF deal. Subsequently, we've seen the government also intensifying its domestic revenue mobilization by introducing new taxes to raise more revenues internally. Well, the key developments that we've observed is following the IMF and World Bank Spring annual meeting, where the fiscal authorities were able to meet and fruitfully be able to get these external creditors, the Paris Club and China, to form an official credit committee. And that itself, I mean, from there, we're expected to start a roundtable discussion to be able to secure financial assurances from these external creditors. Yes, we still have some milestones, or in terms of, I mean, if you look at the experiences we've had under this framework, there has been some risks around it, but this so far has been a positive outcome from these fiscal authorities.
Interesting. When is the Bank of Ghana's next monetary policy interest rate decision? When would that be? Considering where the key indicators such as inflation, exchange rates are at the moment, how do you think the BOG will decide?
Well, the MPC is expected to hold its next meeting ending of this month, which is in May, and with the current level of 29.5% policy rate, given the dynamics of how inflation has been on the downward trend in recent, I mean, with the recent releases in the recent months, in addition to expectation of further decline, I mean, in my view, I'm expecting the central bank to hold its policy rate in its next meeting in May. I mean, with the aim to support growth prospect. I mean, if you look at in terms of how the challenging phases we've had from 2022 coming to 2023, growth outlook has been softened. So I'm of the view that the MPC should hold its policy rate at the current levels.
Okay, so if the BOG decided to hold, what would that mean for assets such as stocks, those who are buying into treasuries and local bonds, in which the primary market auction rate is now around 20% on T-bills?
Well, the dynamics on the T-bill has a little bit shifted in terms of the responses from the Treasury policy rate hikes. What we've clearly seen on the Treasury market playing a major role has been on the demand and supply forces, where the government do not have any other alternative sources to finance a budget deficit, hence relying heavily on the Treasury market. So the forces of demand and supply on that side has been a key determinant on interest rates in that sense. But however, if the policy rate is held at 29.5%, with possibly a likelihood of in the next subsequent meetings slashing the policy rate, cutting the policy rate, then that should send a positive signal in terms of the credit markets, because the policy rate feeds into the various lending rates by the businesses as well.
Just to sum it up with you, Michael, what do you think will outperform this year? At the end of the year, take a bit of a long shot for me. Is it going to be stocks? Is it going to be bonds? Is it treasuries?
Well, the treasury markets for now, and I'm expecting that to continue. It continues to drive market attention. If you look at what has happened on the bond market following the domestic debt exchange, slashing coupon rates to low 8 to 10%, we've seen the attention shifting to the treasury bill market. I mean, that said, with the releases again, with the releases of these firms on the stock market, if the positive result we've seen in Q1 continue to, sustain for the subsequent quarters, then I'm expecting that to also entice some investors onto that market.
All right, thank you for those insights on the Ghana market. Michael Asare, research analyst at Uppercut Securities. Enjoy the rest of your evening over there. Thank you so much.